Welcome back to Talking Crypto. Today, we bridge the gap between the Federal Reserve's pivot toward liquidity and the rigorous compliance standards of Cardano's EUTXO model. The boardroom era of blockchain has officially arrived. As we move through 2026, the Fed is continuing its path of interest rate adjustments. With the federal funds rate potentially hitting 3% by year end, the pivot toward monetary easing is reigniting institutional risk appetite for digital assets. We examine how these shifting interest rate benchmarks are driving asset managers toward decentralized infrastructure. Traditional bonds are losing their edge, prompting a massive rotation into alternative markets where transparency and yield are paramount. This is where Cardano's extended UTXO model stands out. Unlike account-based systems, the EUTXO model offers unparalleled predictability and security. Its deterministic nature is a game-changer for institutions, allowing for predictable fees and outcomes without the risk of gas wars. The focus on formal verification through programming languages like Haskell and Plutus significantly reduces the risk of vulnerabilities. For institutional players, this level of mathematical certainty is the primary requirement for large-scale adoption. This technical foundation is positioning ADA as the primary institutional settlement layer for tokenized treasuries. We've seen this market surge past $10 billion this year alone, with firms like BlackRock leading the charge into on-chain liquidity. The regulatory fog that has clouded the industry for years is finally beginning to lift. With clearer jurisdictional lines and a shift from policy-driven to fundamental-driven markets, the path for decentralized infrastructure has never been clearer. In this new landscape, Cardano's commitment to transparency and adherence to global standards makes it an ideal candidate for the next phase of financial evolution. The individual and the institution are finally meeting on the common ground of proof. Be on the lookout for the full-length podcast coming up. Follow and subscribe to Talking Crypto. No influence, just news.